Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Adolfo and Andres Rodriguez with AR Financial Group, and we'll be talking about tax mitigation for retirement. Guys, welcome to the program.
Thank you. Glad to be here.
Thank you for having us.
You are welcome. I love working with and talking to father and son teams because it's such a great dynamic. So I want to learn all about how you serve your clients. But give us first a little bit of background on how you guys got into the financial services industry. Adolfo, I know you have been in for quite a while, so give us a little bit of start on what got you into the business in the first place back in the day.
When I graduated college, I had a finance degree and started working in the finance industry and slowly diversified into the financial planning. It was something that gave me the what I wanted to do. I thought it was interesting. I thought it was challenging to be able to do financial planning for people because everybody's different. Everybody's situation is different. And as the years have gone by, you know, the more knowledge you gain, the more in depth we've gotten. And now I thank God every day that's the move I made because I'm in the industry that I love to be in. I look forward to going to work every day.
Well, you know, statistically, and Andres, we'll get to your background in just 2 seconds, but it makes me think of something, Adolfo, because statistically these days, you tend to be in like 3 completely different or 4 completely different industries, not just changing jobs. You know, back in the day, you'd get a job, work 30 years, get the gold watch and a pension. These days, you're multiple jobs, and different industries. So to see you being in the same industry and still having the passion for it that you did at the beginning is super, super encouraging. So I love hearing that. Andres, what got you into the industry other than your dad?
Well, I've been alive through probably the greatest market crash since 1929, the 2008 housing crisis. And then on top of that, I've been alive through the longest bull run in history of about 15-ish years. So being around in that time like that and my dad being in the financial industry, I just thought it was a great opportunity to get into the industry and learn how to help people. So, and then that's where we are today.
Yeah. You know, that really is interesting, the juxtaposition between the worst of times and the best of times. And guess what's going to happen next month and next quarter and next year? We don't know. I mean, just changes. And so you need to know the foundational things you should do when planning for retirement. And that's what you serve your clients with. So guys, this is what we're talking about here today is planning for retirement, but with the focus on taxes. And I know that you can't really control, market growth. We also can't control taxes, but they're both a really big factor in planning for retirement. So how do you advise your clients when it comes to the topic of taxes?
Well, there are several things we can control in a person's retirement. One of the things we can control, obviously, with proper planning is taxes. Taxes can be mitigated early enough where you pay little to zero tax in retirement. And taxes, unfortunately, we see growth in the tax structure coming very quickly as our country is becoming more and more broke due to all the entitlement programs that they have to pay, especially Social Security, Medicare. Between 2022 right now and 2029, the remaining 70% of baby boomers will be retiring, and that's going to put a huge stress on Medicare and Social Security. And taxation, unfortunately, is one of the ways that our government will get income to fund these programs. And it's important that we try to keep the taxes not to be a factor in a retirement plan.
Yeah, you know, you hear about the deficit and how many gazillion, bazillion, trillions that it is, and you can only imagine how do you close that gap. Well, you got to cut spending. Well, you know, good luck with that. We don't know how that really could pan out. But how does government close that gap? Increasing their revenue. And where does their revenue come from? we know it. That's what we're talking about. So for people that think, oh, yeah, taxes will kind of remain constant, taxes have to go up, given that one fact alone. We don't know how much and how fast and what the percent, but they have to go up. So that is going to close that gap so that our country has a good credit rating, literally. I mean, if we keep going under and under in all of this debt and deficit, that impacts more things we can do. So doesn't that make sense that if the deficit is X, to close the gap, taxes are probably going to go up?
Well, one of the reasons so right now we're at one of the lowest tax rates ever in our country. After World War II, our taxes got all the way up to 94%. And right now we're definitely at a discount. Trump's plan brought down the taxes, gave us a break. Our tax savings ends on 2026. So we hope they go back to the regular, what they were previously, to the tax cut that Trump's offered. But we know taxes are going to go up. The inflation going up, interest rates going up has put a burden on the government, because as interest goes up, they have to pay more interest on the deficit they got. And so the only way that does is keeps eating into the money they have there, and the money is tight to begin with. They only got about 30% of that money that they have to spend on anything else besides entitlement programs. So you can see why taxes have to go up. It's not a matter of if they're going to go up, it's when and how much they'll go up. That's one of the things that can be a factor in your retirement, when you have taxes siphoning, 50% of your retirement budget. So we have to address that. It's very important.
That's why it's key right now to look at multiple like Roth IRAs and other in vehicles that allow you to pay zero taxes in retirement.
Yeah, let's touch on that concept. We don't want to get into the weeds of specifics. That's more for how you can work with a client to kind of guide them. But we've all heard of the Roth, and there's some pros and cons of that. And maybe the con is you can only contribute X, or if you make a certain amount of money, there's some limitations. But then there's other financial vehicles that go along with that to help you pay little to no taxes. So talk about the concept of that, how that impacts positively retirement.
Well, so you were saying the Roth are limited, and it's true. Roth is limited on certain amounts of money you can put in, depending on how much you earn. But there are things we call the backdoor Roth. There's other ways also to increase the Roth contribution you can do. The other vehicles, there's a lot of vehicles out there that will allow money to grow in a tax-free environment. Life insurance is one of them. There's ways to set it up. It's called the 7702 rule of the Internal Revenue Service, which allows money to grow inside a life insurance policy and not be taxed, because the money is withdrawn as a loan. And because it is a loan, the IRS will not tax that. This is all legal. It's just one of steps that people can take to reduce taxes in the future. The money in the insurance plan is, we used to call it a rich man's Roth, rich man's IRA or rich man's Roth, because no taxes were paid, and the limitations that were put onto Roths were taken away by the life insurance plan, for sure.
Yeah, that's really curious, because I think a lot of people hear the word life insurance and they bristle and go, "No, I'm good. Don't talk to me about that. My grandfather told me not to do this or that or the other." But these days, people are using them very strategically, because it becomes an asset, a very powerful way to have money grow. So what are some ways that you're advising your clients to use things like that, again, with the goal of mitigating, reducing as much as possible, or in some cases, eliminating a lot of their taxes?
Well, as you said, life insurance has a stigma behind it. When we're young, life insurance, we try to get the most coverage to cover, our expenses and our income. If we were to die, our family would have enough income to survive, us not being there, to replace our income. As we get older, the clients we advise, we try to get the smallest amount of insurance possible where we can overfund the policy, if you will, and let that policy grow. Some of the returns on these policies have been tremendous in the last few years. We've had a return anywhere from 8 to 12% return on that money. And the big thing about it is the money is guaranteed and it's tax-free. So there is planning that needs to be done. Not everybody's the same. Obviously, you have to have decent health so that your premiums don't overwhelm the amount of money that has to be put into it. There are some expenses that have to be paid to the life insurance at the beginning, but if we can do a life insurance policy for a minimum of 10 years, the rates come down equivalent, if not less, to what you're currently paying in your 401k or investment money for managing and fees, obviously.
And the word you used jumped out at me because I think anybody talking about money loves to hear that word that starts with G, guarantee, because who can guarantee these days anything? But talk a little bit about the safety and security, the guarantee. Is there a floor? Can you lose money in that kind of a policy? So talk a little bit about that security level in that investment class.
So whenever you have a contract with an insurance company, it is a contract. A life insurance contract is a contract. What it says is that the insurance is going to guarantee that money. So when you make that money is not lost. It becomes principal. The insurance company guarantees that it will pay X amount based on the return of the indice every year, and that money is credited to your account. And once it goes into your account, it is guaranteed as being yours, and it cannot be lost. Obviously, we can't perform at, sometimes the market has done, 25%, 20% return. We can never do that high, but we've noticed that our clients, once they're over 50, what they want is a steady growth. And if any steady growth, we can get between 6 to 8% on that money where there is no loss on market downturns. It's huge. The biggest, Will Rogers said, is not how much you make on your money, is being sure you get your money back, and that is what this does. This guarantees the money. Once you've earned it, you keep it forever, and this gives people a guarantee that they can look at the money they have inside of insurance policy and know that money's there. It's not going anywhere. Obviously, if the market has a downturn, you will make nothing that year, but you mitigate not losing anything. And I think that people start to realize that losing money can hurt any gains previously on any investment.
I'm not good at math, but I do remember hearing something about this. If your portfolio loses, let's say 10% in a year, how much do you have to gain the next year to get right back to the 10%? It's not 10% because you've got, taxes and whatever. So it's a bigger number than 10%. So stopping losses is a really big deal. It's really huge because it keeps that momentum going. And if you can stop that loss where all of your other, friends and family took losses, and if your contract kept you from losing money, all of a sudden now when the market starts moving back up, they're under and under and under still and getting back to ground zero, and you're now starting to slowly move back up. So I want people to realize that that's a really powerful momentum shift that you can deliver to your clients.
Yeah, we actually show this to our clients. We show them the scales. If you lose 10%, you have to make 11.2 to get it back. And if like on this year, the market went down 20%, you have to make 25% just to break even. We're not talking about making money. We're talking about breaking even here. And so that's something that people need to open their eyes to.
And so if you had a nice chunk of money in that insurance policy and all your friends lost 25 or 20% and you lost nothing, well, now they're scrambling to get that 25% just to get what they lost back. And now you're, slowly incrementally building back up. It might have only been 4 or 7 or 8%, but, having that floor there, that solid floor where you can't lose money, I would think that, your clients are calling you up going, I can sleep well at night. That's awesome.
Yeah. It's just that we live in a society where people want to get rich quick, and they need to realize that sometimes zero is your hero, Sometimes I'd rather have nothing and have average years than make really big returns but lose really big returns.
Yeah, because if there's a huge upside potential, then there is probably a huge downside potential. So, like what is Warren Buffett known for saying? You can never go broke by taking a profit. So if you're, trying to day trade or something, take that profit. So in having that, zero can be your hero sometimes, especially in market volatility. You mentioned loan and borrowing and things like that. That gives me the impression that if you have some cash value built up into this product, that you can borrow against it for a lot of things that you might need, where maybe you're not going to the bank and get money for college tuition or car. That gives me the impression that this is more than just a death benefit that people assume that a life insurance is for. While there is a death benefit, there seems to be a lot of living benefits too.
Yeah, it's a win-win, right? Because you have a life insurance policy, and God forbid you die, it pays you the money that you have tax-free because it's a death benefit, so your beneficiaries pay no tax. If you need to use it and you can borrow it tax-free, you're not paying tax on that money either. So, yes, you can take money out to pay for college. People buy cars with it. People pay, emergency money with it, without going in debt, because what you don't want to do when you go into your retirement years is go into debt. Because any kind of debt you go into, you're going to have to pay it off your retirement bucket, your retirement nest egg. It's got to come out of there. So being able to borrow money and not pay any interest on it, you can't beat that. It's the best of both worlds, but it has to be a professional that sits down with you. It can't be an life insurance salesman. It has to be a financial planner. We like to call ourselves more retirement consultants. We sit with you. We show you strategies that you can implement on what you have. I'm not here to make you rich. I'm here to show you what you got and make sure that your needs are met as long as you live in retirement, so you never fall short, because there are a lot of things that can happen during a retirement cycle that could, kill your retirement plans by many years.
Yeah, that sounds like a really important point to bring up. This is not something that you hear and go, that sounds like a great idea. Let me Google it. Oh, look, here's an ad. Click. Boom. You're not going to get what we're talking about here. You need someone that knows all the nuances of not only how to set it up, but how to make sure it's set up for your specific situation. And it's not just a cookie cutter template of a contract. So that's really important to think about. There's some things you can do online, like, hey, show me the, movie times for this movie. But when you're talking about your retirement plans, boy, this is something where you need someone to sit down with you and fully understand what you need. This kind of thing with mitigating taxes, planning for retirement, transferring wealth to your family with that legacy kind of planning, all with the goal and the promise of little to no taxes, or mitigating taxes as much as possible. Makes me think about, all the stories you hear about, like, oh, that person is so mega rich and they hardly pay any taxes. Well, it's not like they're evading taxes. They just know these legal and moral and ethical strategies that maybe the common man doesn't know about. So isn't that one of the ways that people are just really maximizing their money, is knowing these kind of strategies?
Yes, I don't know if people know this, but we tell our clients the IRS, the local office of the IRS in your town or city, you can take them your taxes and they'll do the taxes for you for free. However, if you take it to a CPA, you're going to get a lot more reduction in your taxes, because they're going to show you things you can do to reduce your taxes. So this is the same way. You can't go into a field with limited knowledge and expect to get the maximum benefit. It's better to go and talk to a professional, somebody that deals with it. We work with CPAs also, because we're not tax professionals. We have to have a CPA guide us through a lot of this stuff and more complicated stuff with our clients. So it's just having somebody that has the knowledge that can sit there and guide you, because retirement, remember, you worked 40 years to hopefully live another 25 years comfortably in retirement, and there's so many things coming at you. And taxes, unfortunately, is one of the biggest things that can come at you, because Uncle Sam, since the minute you're born, he's on you. He's your uncle to the day you die. He's not going to let you die without paying every single dollar of taxes he can get out of you.
Yep. It's like having that bucket with holes in it and the water's flowing out, and that's representative of your money, and the holes are the taxes and the things like that. And boy, if you can go through and just pop, and plug those holes in. Boy, that's where you get more comfortable retirement, and just knowing that you can sleep well at night, and knowing that, in retirement now you don't have the ability to pour more money in because you've chosen to retire. Well, boy, now more than ever, taxes are going to hit you hard, and fees and things. So knowing how to maneuver through this is just spectacular. Well, gentlemen, this is just powerful concepts that you're working with your clients on, helping them lower, mitigate, eliminate taxes in a lot of cases with some really strategic ways. If someone is interested in learning more about this and connecting with you guys, what's the best way that they can reach out to you?
The best way to do is to give us a call at our office at 281-206-0066. And the other thing is, you can go to our website. We have an educational website. It's called Safe Income Protection, safeincomeprotection.com. And if you go there, it's a whole bunch of videos. It's got like 18 videos. They'll educate you and show you. You can look at them at your own time. That's safeincomeprotection.com. And call us or go to the site, and we'll be more than happy to talk to you about your situation. And if we can help you, we'll have somebody in your area you can go talk to that'll give you the same advice and comfort you're looking for.
Well, Adolfo and Andres, this has been wonderful. Love talking with you. Love learning how you have a passion for the industry and serving your clients. So thank you so much for coming on to the program today.
Thank you for having us.
Thank you for having us.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.